Hello, once again, welcome to another video. My name is Wing Yi. So let's go ahead and dive into an article which I found on the Yahoo website and under the heading of Market Watch. And the title is the quote, pandemic boom markets, end quote, where home price growth is slowing. Sacramento, Phoenix, San Francisco, and more. All right, so let's dive into it. All right, here's the highlights of which I found interesting. Of course, toward the end of this video, if you see the value of this particular video, please smash the like button and also subscribe to my YouTube channel. And so let's go from there. So the article saying that the pandemic housing boom is officially over. Home price appreciation has stalled, with markets in the West leading the nation in declines, according to a new report. By the way, toward the end of this video, I will give you my personal opinion based on my 30 years of real estate investing experience and based on guiding and consulting hundreds of our real estate investors throughout the past several decades to buy in the best cash flow markets, the entry-level affordable home purchases for rental properties where you can cash flow if you match up the rent versus the value ratio and so forth and so on. So with that said, let's continue. Okay, it says pandemic boom markets cooling the fastest, a report from First American. And they are saying they expect home prices appreciation to fall further. Mark Fleming, the chief economist at First American and author of the report, said, as the hot sellers market of early 2022 turns in favor of buyers. Well, I wouldn't go that far. Still a seller's market in most areas of the country. In fact, almost all areas of all market is still a seller's market because most markets are a balanced market is 5 to 6 months of inventory. Most markets that I've been researching lately have anywhere from 3 to 4 months of supply of inventory. So still a seller's market. So this author's comment is a little bit off, not quite correct. By the way, it's my job to debunk any type of misleading headlines and also provide my perspective, because just because these so-called website, these experts, they are not necessarily expert. They could be wrong. In fact, based on past research, 50% of the time, all these so-called real estate experts are wrong in their prediction. Just so you know, all right? So I'm here to validate and debunk any inaccuracies that are going on out there, and this happening quite often, especially with the clickbait YouTube videos out there and all those doom and gloom negative headlines, and also what I call a fear porn video, realistic porn videos, fear-based porn. Did I say this correct? Fear porn, YouTube realistic videos. That's what's driving a lot of things. Anyway, Fleming, this guy, told Market Watch in an interview that home prices appreciation could go down to low single digit. So you have to read this kind of sentences very clearly. You have to look at compare the headlines. Typically very outrageous headlines, because negative news sells. But you have to read the fine print, and I'm helping you to become informed and educated. Read the fine print in any article. You will see some important fine print which will potentially debunk the headline. Does that make sense? So anyway, appreciation could go down to low single digit. This means that the home appreciation price, home is still appreciating, but at a slower level. It's decelerating. It's not minus. It's still have a positive appreciation rate. That's what I take away from this sentence. He says, home price appreciation could go down to low single digit. He's not talking about a correction. He's not talking about a double-digit or triple-digit real estate crash. No. All right. So let's see what else. What's some additional takeaway from this article? Prices are coming down. Appreciation is moderating in the housing market more broadly. Again, my interpretation of this paragraph is such that there are 400 metros in the US. There are many metros are still doing very well, either stabilizing or appreciating single digit, some appreciating a double digit. You'd be surprised. I have researched those recent markets that are still appreciating at a double digit. But the mass media, but the mainstream media does not talk about those good news. They always dwell on a positive, on the negative, because negative news, negative headlines sell advertising, sell subscribers. And and also we're still selling 4.7 million homes a year. The typical amount of time is 19 days to sell a home, which is very, very quick, historically speaking. And this doesn't sound like a recession, Fleming said, right? So he's saying that this kind of data to him, according to Fleming, is not recession type of data. So anyway, the home prices in the western region of the US have the fastest percentage drops in home price appreciation. That's something that are pretty much expected, because the western region is during the pandemic was boom markets, has risen so much. The housing prices have skyrocketed so much in the past 2.5 years that they bound to be corrected, a slight correction. I would not say a crash, for sure. If you saw my other video, you would acknowledge that clearly there's one trigger that is preventing a housing crash. You know what that is? Home sellers or homeowners. They are sitting pretty on their home that they purchased several years ago and beyond, with massive amount of equity, with extremely low historical interest rate of 4% or lower. And there's no way they can sell their home to buy another home costing more and at a 7% rate, from 4% to 3% to 2.5%, and move up buyer to buy 7%. No way in HELL those sellers can sell their home. They have no incentive or little motivation to sell. All right, so that's my takeaway. So no stress sale, no crash. That's the bottom line. Hopefully you agree with me, because this is the economics 101. Low supply, moderate to high demand, and housing prices will continue to rise. That is economics 101. Hopefully you agree with me. Comment below on this video. All right, furthermore, San Francisco saw the slowest annual price appreciation at 1.1%, which is down significantly from the peak of 17.6% in July of 2021. And this article recap and summarize the following sentences are very, very important. So pay attention. So it is no surprise when you look at the list, most of the markets that are decelerating the fastest are our Western markets, Fleming said, which is, Boise, Idaho, Las Vegas, Phoenix, Arizona, and, the San Francisco Bay Area, where I live for the past more than 30-something years, and Southern California. And parts of Seattle and Tacoma, it has also decelerating the fastest. So yeah, Western markets, true, has decelerated, at least for the short term. Conversely, now this is important, conversely, many markets in Florida, such as Miami, are still holding up pretty well. Yes, I have did many recent Redfin database videos on different markets, and I would concur that many markets in Florida have not lost value. If they lost value just maybe several percentage point, but most are still either stabilizing or increasing in value at a single digit rate. Most areas in Florida, like you said, Miami and the up and down Atlantic coast, Fort Lauderdale, those Gold Coast area, very, very high price. And then on the Gulf Coast, western side, Cape Coral, Southwest Florida, doing very well, and Naples, and in Tampa and Sarasota, the Gulf Coast is doing extremely well. Of course, Central Florida is doing really, really well, Central Florida and the surrounding metro. So, yep, Florida in general have done well. There are some pockets of a slight price drops, but not significant. Mere single digit price drop in certain pockets of Florida. Markets like Tampa and Miami benefit from strong interest from foreign buyers. That's very true. Foreign buyers for the longest time has been the main player in the Florida real estate market, and they continue to be one. Also, this article failed to mention there are the Wall Street, right, hedge funds and institutions like BlackRock and Invitation Home, just to name a few. They are really targeting the Florida markets, as well as other markets in the Sun Belt. They are buying a lot of single family home in bulk, hundreds of homes at a time, buying it up and rent it out. So first time home buyers have very little access to these entry level homes, especially new constructions. Okay, let me continue with the article here. Buying real estate in the US is viewed as a safe place, is a safe haven. I mean, quote unquote. Foreigners bring their all cash ability to buy with all cash, is a safe haven from the country where they live, right? Most foreigners the country where they live have very high political instability, very high risk associated with home prices, plus the real estate prices in those foreign countries are very, very expensive, much more expensive than here in the US. So they take their money from the home country, come over to the US, and call the US real estate a very safe haven. It's a place to park their money so they can earn high returns and so forth. Factoring in migration from other states like New York, that results in strong demand for the Florida market. I totally agree. Migration is continuing from high-cost, cold weather areas in the upstate Northeast, New York, New Jersey, Connecticut area, and the Midwest. You might as well say many people from California are also migrating into Florida to retire, to work, whatever. So housing markets in the Midwest, a lot of people doesn't know housing markets in the Midwest are also interesting to look at, let me say, given how quietly, slowly, but steadily they are appreciating. I would agree. I have done some videos on the Midwest, not that many, but again, the mainstream media, they don't talk about the good markets in the US. They only dwell on the negative news. Yeah, market crash happening in California, Boise, Las Vegas, and Phoenix, Arizona, among many markets in the Western region. They never talk about the Midwest. Many Midwest areas are doing well. We're talking Buffalo and Cleveland, Ohio, St. Louis, and Detroit, Michigan, believe it or not, Indianapolis, Indiana, Kansas City, Missouri, Memphis, Tennessee, Nashville. All these Midwest markets are really, they have appreciated double digit. I will show you in the future videos of these markets because, again, it's positive headline. Nobody want to talk about it, but they're doing well. The Midwest is doing well, which is shocking. Of course, South and Southeast is doing well. Texas is also doing well, although in some Texas market, you have a little bit of correction like Austin, but at least that's for the short term. But South and Southeast, we're talking Alabama, Tennessee, Florida, Georgia, South Carolina, North Carolina. This is part of the Sun Belt in the South and Southeast, where a lot of our investors are moving to because the prices are so low. $200,000, $300,000 single family homes that rents for $2,000 per month. Those are the very numerical metrics that that investor would like to look into to buy. So that's the yield, the cap rate that they want. So at the end of the day, my takeaway on this article is that real estate is local. There's no such thing as a national real estate market. So regardless of the recession, inflation, and all those crises going on in the world, real estate is still is a hedge against inflation, is an inflation hedge. If you buy in a right market, you can, as an investor, you cannot go to a high cost market to buy a property. You cannot come to California and buy $1 million single family home. The rent is only like $3,000, $3,500. You're not going to cash flow at 25% down payment because the numbers does not make sense. Yeah, risk investors, especially mom and pop investors, you need to go to a market that are affordable. We can buy entry-level homes at a very affordable price, where the rent is quite high relative to the purchase price, and where the market is growing, job growth, population growth, migration growth, and that's the metric. That is the buy box, if you will, quote unquote buy box. As risk investors, the buy box are you need to buy a investment property where the rent that you're charging will cover all your monthly debt service, including your mortgage, taxes, property management fees, and insurance and vacancies and upkeep. At the end of the day, you still have a little bit of positive cash flow left because you find the right tenant that could pay off your debts. So you can create long-term wealth using this methodology. Does that make sense? So home buyers also, again, rising, skyrocketing housing prices. So if you want to go to a Sunbelt area, warm weather, low affordable homes, South and Southeast is the most desirable place. We're talking Central Texas, Austin and San Antonio in particular, where the prices are still somewhat affordable. And same thing with Georgia and Alabama, Tennessee and Florida, South Carolina, North Carolina. Those are still very affordable markets, but even those markets have double-digit appreciation during the pandemic. So that's how it is. So for investors, you know what I'm talking about. You buy, you can cash flow at 25% down payment, even with a 7.5% interest rate. Believe me, you can do that. And you should do that and buy and hold long-term. It's a long-term 10-year hold at least as an investor. So find the right market, surround yourself with a good team, and then invest. And for the long term, regardless of the recession, regardless of all those negative news, because you buy for the long term, let your tenant pay off your debt service, still have some cash flow, then raise your rent from time to time. And then your renter going to pay down your mortgage systematically, and then you will achieve 3 to 5% appreciation on a conservative basis. Then in 7 to 10 years, each of your rental property should achieve quite nice equity for your financial retirement. Okay, so there you go. That's all I have. And if you receive a lot of value from this video, please smash the like button and also subscribe to my YouTube channel, and also sign up for our newsletter on my website below, and you can receive free weekly real estate investing information to help you become a very good real estate investor. Thank you so much. This is Si Wing Yi, and I will see you on the next video. Bye-bye.